Hey, what's up, my friend? So, welcome back to this week's market analysis, right? Last couple of weeks have been somewhat hectic, busy, right? We have the trend trading bootcamp, we have the TFMP enrollment, right? So now that the dust have somewhat settled, right? Things are going back to normal. So if you're new to this, right? If you're new to trading with Rayner, what this is, right? What this video is that I put out each week is basically sharing with you my thought process on trading, right? I'm a trend follower, right? I like to trade trends across the different financial markets and, hopefully catch a trend. And if I don't catch, I simply, cut my losses. So these are simply, I would say, the principle, the core concepts of my trading, right? So my goal each week here is to, share with you the markets I'm looking at, to drill important trading, concepts and principles into you, right? I don't expect you to be a trend follower. I don't expect you to trade the same way I do. But what I hope to achieve is actually to drill this important concept so that you can actually find your way as a trader. You can actually, become consistently profitable in your own manner, right? This is my hope, right? I really don't expect, you to, trade the way I do because, traders, we all have different temperament, different idiosyncrasies, and, we are just different, right? But I hope that, the core concepts and principles, that doesn't really change from trader to trader. If you're talking about, trader who actually, lasted for the last 10-20 years, who are actually in this business, for a long time, their core concepts are pretty much the same, okay? So with that, right, anyway, back to, today's video, I'm going to talk about a few trading setups. The Euro Canadian, the pound dollar, soybean, and corn, right? I want to talk about corn, right? Because if you've been following me, right, I've talked about corn for quite a bit, right? And finally, things are, looking not too bad, right? So I'll share that with you more in this video. And I'll see you there. Okay, so just a quick one. These are some of the feedback that I've gotten from the trend trading bootcamp. I really, appreciate all your comments and, feedback because I read every single one of them, even though, I didn't reply to you. It does not mean that I'm ignoring you. It's just that, there's too many and I know I just, couldn't reply to every one of you. So nonetheless, right, thank you all for your feedback, right? For example, Lam said that, the lessons have more value and more practical than the paid webinars he attended, right? Appreciate it, right? Or Prophecy, he says that, it's a skill that you cannot unlearn from this training as well. Okay, so these are, some of the feedback that I've gotten and just want to share them with you. And now moving on into this week's market analysis, right? The first pair that I'm looking at is Euro Canadian. Okay, if you ask me, right, you can see that Euro Canadian on the weekly time frame, it has been in the range over here, over, I would say, since February 2016. That's almost a year, right? This range over here, almost a year. Then it broke lower, and right now it's retesting back towards this level once again, the 143 level. So of course, you have to go down to a lower time frame to see a clearer picture, right? So what I'm seeing over here is that price has actually approached this level, this key level, 143, right? And we have a slight bounce over here, a slight rejection over here, right? This small looking bearish pin bar. Am I looking to go short now, right? Because after all, we are having a trend with us, right? This is a downtrend with the trend. We are at an area of value, right? So now the third thing is, what is our trigger? Right, what is the trigger that's going to put you short on this market? So if you ask me, right, I'm not too comfortable with this small looking bar over here. Okay, because if you go down into the 1 hour time frame, there is, nothing too bearish about it. It still seems like an uptrend. All right, higher highs, higher lows, right? Higher lows, right? This pretty much is just one move, another low, price traded higher, and now this seems like a retracement. So if you ask me, right, there is no conviction telling me that the sellers are in control on this lower time frame. All right, and if you look at the daily, okay, the rejection candle, which is this over here, this lower close over here, is pretty small. And to me, right, there is no, I don't have confidence just, going short based on this small lower close candle. So what I'm looking for instead is, right, hoping that price would spike higher, another move higher, right, taking out the stops above this high, and above this high, and above this high. So once it does that, right, it's going to sucker traders who are looking to long the breakout. They will look to get long. Okay, and then if it can close lower like this, right, these breakout traders are now trapped. Right, this to me is a much more attractive setup to trade. Okay, because you have the breakout traders who are now being trapped on the opposite side of the trade. Right, to me, I prefer this setup over and over again. So this is the thing I'm looking for on Euro Canadian, right? To see if it can spike through the highs, this, and then closes lower, right? So why is this important? Because if you know that traders who are long the breakout, where would they put their stop loss? Chances are, right, just under, let's say, under the low of resistance, the middle of the range, or maybe at the low of the range. So this means that if price were to continue trading lower, it's going to hit this cluster of stops to fuel further price decline. Okay, so you can see how, do you understand the order flow dynamics behind this? I'm not just simply, trading, random candlestick patterns on a chart, right? I'm thinking where traders are entering their trades, right? Where would they put their stop loss, and where would they feel the pain so that I can actually profit from their losses? Because, after all, trading is a zero-sum game. Okay, so this is my thought process on Euro Canadian. I know I sound a little bit sadistic, right? Profiting from traders' pain, but this is the fact of trading, right? For someone to win, someone has to lose. Okay, so this is Euro Canadian, the market I'm looking at. Another market, pound dollar. This is pretty straightforward, right? If you just look at this chart over here, right? What is the trend? Well, it's a downtrend, right? If you attended the trend trading bootcamp, right, I shared with you a very simple way to identify the trend. Just put in the 200 period moving average, right? This one is exponential. I use black color. We click OK. Just follow the direction of the 200 MA. Right? In this case, what is the direction of the 200 MA? Well, it's pointing lower, right? So since it's pointing lower, the trend is down. So I'm looking to short in the downtrend. So the next question is, where do you want to short? Well, I want to short at an area of value. And if you ask me, this 127 level over here is an area of value. This is an area of resistance. So if price can come towards this level, I'll be interested to take a short trade towards the downside. And again, right, similarly to the Euro Canadian, I'll be looking for a false break of the highs, all right, as an entry trigger to go short. All right, so this is pound dollar. And a market I want to talk about is corn, right? So corn, if you have been following me over the last, last 4 or 5 videos, you know that I've been talking about corn consistently for quite a bit. Okay, corn. And I've talked so much about corn that right now on my feed, I have a piece of corn as well. So what is a corn on your feet, right? Just to sidetrack a little, it's basically a hardened flesh that grew on my feet, right? I'm not sure why, but based on Google search, it seems that I've maybe applied too much pressure, maybe due to lifting weights and stuff like that. So there's this hardened flesh that is on my toe. Actually, I need to get rid of that corn on my toe, obviously. But just to share with you. It can be a bit gross, but since we are talking about this corn market, right, I just want to let you know that there's a corn on my feet as well. Quite annoying. But anyway, right, back to this market, corn. Okay, so for those of you who did not watch the earlier videos, let me explain to you why I was actually bullish on corn. If you look at the weekly time frame, right, corn, right, it does not look like a uptrend at all. All right, there's nothing bullish at it, right? Because in fact, it looks like in a longer term downtrend. Okay, so this may actually contradict a little bit about me talking about the trend. But one thing that I want to share is that, to me, right, primarily, I always focus on the trend on the daily time frame. So this means that sometimes I could be against the trend on the weekly, but if the daily is, say, is in a range or in an uptrend, I will still focus on the trend on the daily time frame. I'll give it more weightage compared to the weekly time frame. Okay, so in this case, right, if you look at the trend on corn, right, you pull out the 200 MA, it's pretty much in a range if you ask me, right? It's in a range, right? See, it's flat already. Okay, so to me, right, in this kind of a market, I could go long or short either way. But to me, I prefer the long side. Why is that, right? Because if you look at corn, it has actually been in a range for quite a while, right? From here all the way to here, right? It's pretty much a range for, I don't know how many, June to now, it's about 8-9 months. Okay, and on top of it, right, I mentioned, right, that this over here is key when you have some build up at this resistance. Why is this build up key, if you ask me? Right, this is key because, as you know, you studied technical analysis, right? When price is at resistance, what do? When price is at resistance, you go short, right? So there will be traders who are going short, right, when price is at resistance. And when you go short at resistance, where do you put your stop loss? Well, you put your stop loss above the highs, right? Because again, the textbook, the courses will tell you, say, at the moment, price trades above the high, your trading idea is invalidated, and blah blah blah, you should cut your stop loss, right? So that is usually what is being taught. So using that knowledge, right, I want to go long. Why is that? Because I know that the longer price builds up, or rather the longer price consolidate at resistance, more traders are going short. And when more traders are going short, they're going to put their stop loss just above this high and above this high. Okay, and if there is enough stop loss accumulated above the highs, I want to go long on the break of the highs, right? In anticipation of a breakout higher. So this is what I did, right? I went long on the break of the highs, stop loss 1 ATR below this low over here, which is my stop loss, I think somewhere here, all right? 1 ATR below this low. Okay, so you can see that this setup is clearly the opposite of the Euro Canadian. And the biggest difference is because this market has been in the range for a long period of time, right? I'm not sure if you know that, the longer the market range, the harder it breaks, right? This is somewhat like a fact of trading. The longer it range, the harder it will break. So using that plus this build up I have at this highs over here, right? This triggered my entry to go long on the break of the highs of con. Okay, so this is a trade that I'm in, right? If you look at, the earlier videos, I've been talking about this, for quite a while now. So all that's left to do now, since, in this case, the market has went in my favor, right? I'm just trailing my stop loss. All right, so there is no guarantee, right, that, I will make money in this trade because I'm trailing my stop loss now, right? If it does reverse lower, I could still, end up with a loss. So it's important to manage your open risk, right? It really depends on how aggressive you want to trail your stop loss or how conservative you want to trail. So just some ideas for you, right? You can use moving average. It's quite a simple way to trail your stop loss. Say for example, you use the 20, right? You can use the 20 period moving average to trail your stop loss. So if price close below it, you exit the trade. Or if you want to be more conservative, you can also use the 50, right? This will give you more buffer. Okay, will give you more buffer. So there's no right or wrong to this, right? I think ultimately it's a matter of, what type of trends you want to capture. You want to capture the longer term trend, then you would use a longer term moving average. If you want to capture a shorter term trend, then you'll use a shorter term moving average, right? Simple as that. Okay, so this is a trade on con. And lastly, I want to talk about a soybean. Where is soybean? This one over here. Okay, so if you look at the weekly, right, it's more bullish than con, right? You have actually an inverse head and shoulder that is potentially forming up. Right, this is the neckline. No doubt we have this false break over here. So right now, price is actually retesting back towards this level of resistance once again. All right, this line over here, this resistance. So to me, right, it's again a very similar setup to con, right? If you can, form a continuation pattern like a flag, a pennant, right? If you can consolidate at the highs for a while more, this will attract more stops above this highs over here. All right. Because traders who are looking to short, their stop loss will be above this highs. So the longer it's going to range, the longer that it can build up, right, more stop loss will be accumulated. So if I were to go long on the break of this highs, right, these stops could potentially fuel further momentum for my long trade. So this is what I'm looking for on soybean, right? Say if it does consolidate for another 4-5 candles, right, I'll be looking to long the break of this highs. Okay, so soybean is a market that you also want to pay attention to. All right, so yeah, right, that's all I have for you in this week's video, right? A couple of setups, right? Soybean, the Euro Canadian, and the pound dollar. All right, and I have definitely losses as well, right? I don't make money all the time. So perhaps in next week's video, I'll share a little bit about, some of the losses that I face, right? And, see, we can all learn a thing or two. And one thing about losses that I want to share is this, right? I do agree that, sometimes your greatest lessons can be learned from losses. But sometimes, right, in fact, if you ask me, right, most of the time, you shouldn't be, well, it really depends on which stage of your trading you are at right now, right? For example, for me right now, right, I don't really learn much from my losses anymore because of the fact that my losses is simply the cost of doing business. It's simply the cost of me following my trading plan, right? So I've actually, throughout the years, I've tried to, minimize the number of mistakes I've made and actually, implement it in my trading plan. So if I were to make a mistake right now in my trading, it's usually more of a discipline issue, not following my rules, rather than because I did something drastically wrong, like I enter because the setup is too early, or rather I enter because I was trading against the trend. That usually doesn't occur anymore. Right, so my point being is that sometimes, right, there is just simply nothing to learn from your losses. Right, it's simply the cost of doing business, and it's important to know when there is a lesson to be learned and when there is no lesson to be learned. For example, say for example you incur a loss on this trade, and you realize that if you wait for a candle close, all right, then you wouldn't get long, and then maybe it would have prevented a loss. But that is not really a good way to analyze whether it was the right thing to do based on that result of one trade. Because other trades, if you did not wait for a candle close, you just simply go long above the highs, price could have went in your favor. Okay, so I would say, when you want to think about your losses, when you want to think about the lessons that you can learn from it, right, I think it's really important to understand the basic fundamental, right? Usually whether a candle closes or whether it hasn't closed, right? That is something that, to me, there are pros and cons to both approach. All right, there's really no right or wrong in the long run. All right, because sometimes if you wait for a candle close, it may serve as a confirmation. Sometimes if you wait for a candle close, the price may close so much higher that you miss a good chunk of the move compared to someone who just simply placed a buy stop order over here. So this is what I mean by, there's really no right or wrong, right? So when you want to look at your losses, think about it in terms of, did you follow your rules? Did you follow your plan? Did your emotions get into play, right? I think that is more important as you really start to think deep, dive deep, and understand yourself as a trader. All right, this is an important way to actually look at your losses. And also, if you follow me in the trend trading bootcamp, right? I'm not sure if I mentioned this. Okay, but if you actually start journaling your trades, you start recording your trades, you will have a large number of charts that you can refer back to. And when you have this, right, this is a gold mine, because as you look back those historical charts, as you look back those losses on those charts, you could find patterns that actually lead to losses, that usually lead to your losses, right? I found quite a few, throughout my years of trading, right? So this is why, again, I advocate, right, recording, journaling your trades, especially your charts, right? When you every time put on a trade, screenshot the charts of the trade that you're taking. Like, for example, let's say corn over here. This was a trade that I took, right? I will screen capture this entire chart, right? And write out my entry and exit. Say, for example, I enter at this high, so I stop loss, say, somewhere over here, right? I'll screen capture it. So once I have enough data on this type of charts, right? Say I have 100, 200 charts, right? Along the way, right, you will tend to find patterns that usually lead to winners and patterns that usually lead to losers. So one of the patterns that I find that usually lead to winners is when the market starts to build up at resistance over here, right? It usually leads to a higher probability of a trade working out. Okay, how do I know this? Because I screen capture my charts, all right? And on top of it, right, I've also read books, right, from other traders who actually share this sentiment of mine, right? For example, Adam Grimes talk about it. Mark Minervini also talk about it, right, in both their books. So this is why, right, as a trader, you really want to constantly be, learning, right, evaluating, recording, and journaling. This is the only way you're gonna be a better trader. Okay, so sorry to to digress so much. I hope you found some value in what I've just shared earlier. So anyway, right, that's all I have for you in this week's market analysis, right? If you enjoyed it, right, hit the subscribe button below, right? And so this is the way I know that this is something that you're enjoying. So with that, I wish you all good luck and good trading. Talk to you soon.